We're
All
live.
right. We are live. Welcome back to Bitcoin.com's The Weekly. I'm Graham Stone, joined by Bitcoin.com News's David Sencil. Let's get into the weekly recap
Okay.
of the biggest stories in the Bitcoin and cryptoverse. Kicking it off with the FOMC aftermath. Let me just bring up my share screen here, David. So we've got
Aftermath.
the chart here of Bitcoin. We're down about 6.5% over the week, and this comes after the latest FOMC meeting. So, Fed Chair Powell delivered the second 25 basis point rate cut of 2025 last week. This was widely expected by the market. Maybe not so expected was the hint in Powell's speeches that they may not be cutting in December. So the markets didn't really like that, Bitcoin especially. It dipped down as low as 105.8K here just not too long ago, a few hours ago. So, bit of bearishness on the FOMC front. But
Yep.
Trump did reiterate that Powell will soon be out.
Classic Trump. So he came out and criticized the current Fed chair, saying that uh, he's bad for the economy and accusing him of acting too late. Too late, Powell, on rate decisions. He said, I think the quote that I like the best is he said, "quote We'll get somebody new in there." I love this idea of getting somebody new in to the position here. Just a body, somebody. All of these comments were made immediately after the what's it called press conference from the chairman, and this kind of didn't reinvigorate, but it brings into sharper focus who Trump is going to replace Powell with. He's going to be doing this in May of 2026. There are a lot of people being bandied about as potential candidates. Some people include Kevin Warsh, former Fed governor, Kevin Hassett, former White House economist, Arthur Laffer, supply side economist. And in a press conference that I saw maybe over the weekend, Trump even said that he'd like to have Besant step in to the role. But of course, Besant has I think said that he doesn't want to become the federal chair, Fed chair. I also think this is smart because most of the people I follow think that the Treasury Secretary moving forward is going to have a lot more power than the Fed chair, showing that the kind of importance of fiscal is much more important now than kind of monetary policy.
Yeah, that's the growing narrative that the Fed doesn't really matter as much anyway. It's all about what they're doing on the fiscal side. And the Treasury Secretary, where Scott Bessent is now, that position is more powerful already and will just continue to be so. So Bitcoin has been underperforming relative to other markets, notably equities. One theory on why that's been getting traction here is the so-called silent IPO theory. So this was put forward by Jordan Visser, who's a financial analyst and former president of Vice Multi-Strategy Advisors. So basically, the theory is that just like early investors in startups that IPO, the those early investors use the IPO as a chance to get liquidity, i.e., to cash out. And early Bitcoiners, in a similar way, who were like kind of analogous to the early investors in a tech startup or some kind of startup, are using the institutionalization of Bitcoin as their chance to cash out. So what we're seeing now is a sort of a distribution phase or possibly a transition phase where the asset is moving from the people who are betting on it as early investors to now those who are seeing it as a like a yeah, who are looking at it to the future. So it's transitioning to a more mature market. Now, David, you have some qualms with this, I believe. But before you get into that, just one quote here from Visser, the Jordan Visser, the guy who put forward this theory that's been getting a lot of traction. He says, "This isn't the end of Bitcoin. It's not even the beginning of the end. It's the end of the beginning."
It's so funny. Uh, to me, that's like a red flag right there. People starting to throw out these phrases like this. Just as a tangent, did you see that post from Thread Guy talking about where in the shitcoin cycle you want to get in? The early, the early late, the late early, and the late late. Anyway, this kind of reminds me of that, which is to say, I don't know how rigorous a framework like this is. The only qualms I have with this, and I think we should maybe get into this in token narratives later in the week, is that it feels like this framework is trying to explain the actions that have happened, and so it's less of a theory, but more of a, what's it called?
An explanation.
But it's you're trying to fit what has happened in with what you think your biases in the markets. This guy is probably very, very bullish, and he's trying to fit this worldview that a bunch of OG whales are selling into his already preconceived framework. This would be kind of what I interpreted this as. And so, how can you spin the fact that OG whales have been selling an absolute shit ton of Bitcoin? I think there was another report. There's like 400,000. There's been 400,000 Bitcoin sold in the last 90 days, 30 to 90 days from OG whales. 400,000 Bitcoin sold. It's quite a lot. And yeah, maybe this theory is correct, but some of the accounts I follow, specifically the Giver, kind of ripped apart the how this was laid out in terms of the data not exactly matching what this person is trying to present. Again, I haven't dug in super deeply, but those would be my initial impressions. You and I have talked about this quite a lot, though, Graham, over the past several months. All these whales selling Bitcoin. And this is just, I think, the latest kind of explanation for why this is happening. It's just getting traction because it was kind of presented in a long form, 3,000 word essay, if you will. But you could probably just boil this down to, I don't know, a five to six part thread, and you could probably encapsulate what this person was trying to say. I think the medium of a 3,000 word essay tends to make it seem more serious or have more weight than just like a thread on like why they think Bitcoin is still bullish after all the selling. So that would be it.
Well, that and the fact that it comes from a respected financial analyst, but it does. You could certainly make the case, and I think you have, that it's basically just cope. But on the other hand, you do have data points like this one, which is from Coinbase. So Coinbase published their Q3 earnings just a few days ago, and in the earnings report, it was noted that they hold 2,000. They purchased 2,772 Bitcoin in Q3, and Coinbase CEO Brian Armstrong posted on X that they plan to keep buying more. So Coinbase, obviously an institution, accumulating Bitcoin while the early investors distributing. So that you could point to this as evidence of that silent IPO theory.
Yeah, I mean, I guess my point isn't that I disagree with this idea, but I think the way it's being presented, or at least being absorbed by people, is that this is kind of like a very rigorous explanation, and to me, I kind of this makes sense to me, right? Like, oh yeah, this kind of makes sense. This framework is
Yeah,
understandable
but
and relatable,
it's not
but
academic.
it's not academic, it's not rigorous,
It's
and
just a narrative that makes sense.
it's a narrative that makes sense, and quite frankly, it kind of makes sense to me, and it's one that you and I echoed in the past couple of months, right? Now, but it should be assigned that kind of weight, just kind of like, oh, this is maybe one explanation for how this is happening.
Yeah,
Have you
and
read the paper? I read the paper.
no, I
I read
haven't. But I
okay,
just
I
wanted
read it.
to note that what's interesting, or is that like it's all about narratives. So if this becomes the narrative, then that could be enough, right? The new narrative is okay. Yeah, that's why the OGs are selling, and if people latch onto that and believe that, then that's all you need to sort of drive the next wave, or to like, okay, yeah, we're going to accumulate. This is we view Bitcoin at its current stage as like Amazon when it finally IPO'd, or some like amazing company that moved from the venture capital stage to the public market stage. And if everyone sort of believes that narrative, then it's self-fulfilling.
Yeah, I mean, and that makes sense to me. The only thing wrinkle to this is I think like we've discussed, the marginal buyer of Bitcoin is less susceptible to the flimsy narratives that crypto natives are, and the people who are buying Bitcoin are mostly institutions. So I don't know how much they're swayed by this kind of thing. It could be though.
Yeah, well, you could also make the argument that this is an institution who is pushing this narrative.
Yeah, absolutely. So I do think though that the more constructive, how do you say, the more constructive bullish arguments. I think there are a lot more persuasive bullish arguments than this one. Like, for example, I just listened to a podcast with someone from Bitwise, and they talked about what they're seeing from the institutional side. They talk to institutions and financial advisors every day. That's kind of their bread and butter. And while crypto is incredibly bearish right now, right? The timeline is incredibly bearish. From their side, they say that from the institutions and the RAs that they talk with every day, everything looks very optimistic. And I think data like that is, to me, a lot more comforting and persuasive than some theory about what Bitcoin whales are doing
Well, I
with
mean,
respect to the market.
what you just described, David, that seems actually supportive of this theory, the silent IPO theory, right? Like the Bitwise guys are out there talking to the institutions, and the institutions are accumulating Bitcoin. So that just supports this theory that we're moving in, that we're in this transition stage.
Sure.
Excuse
Okay.
me.
Yeah. We can get. I think we can get into this more. I think that there's. I would quibble with some of the nuance on this. But again, read if you read through the essay or whatever you want to call it, the article. It's it's a little light on data, I think, and very heavy on cheerleading. But again, that having people like this Bitwise guy say that, yes, that would lend it more credence, and would have been more persuasive, I think. Made his original point maybe more persuasive. than what it
All
currently
right.
is.
Let's move
But
on to
yeah,
Solana. Yeah, go ahead.
yeah. So
Go ahead.
Solana, this is again
Yeah.
related to institutions. Institutions, man, doing heavy lifting these days in crypto, which is crazy, crazy thing to talk about. So Solana had a great week last week, primarily due to kind of traditional players, institutions, if you will. First up, the Bitwise Spot Solana ETF launched. So Bitwise launched the first Solana Spot Solana ETF in the US, and it's a staking ETF. In its first 2 days, it has become the top performing ETF debut of 2025. It's outpaced, I think it was like 800 other ETFs that have launched this year. And its record breaking first day was followed by an even better second day. So the first day volume had more than $56 million in volume, the highest of any ETF again, according to Eric Balkanis of Bloomberg. And usually, what you see, this is what Balkanis said, is usually what you see is it tapers off from the first day, right? All that hype tapers off from the first day. However, with the Solana ETF, it increased in the second day. So volume for day two was higher than day one, 72 million. So again, this shows kind of robust demand. This, if you think this is, if this is just because it's a crypto ETF, this is not the case. The Solana ETF launched at the same time as other crypto assets, digital assets. Hedera and Litecoin ETFs also launched at the same time. They had much smaller volumes. I think HBAR and LTC, they had like maybe 1 million, something like that in volume. And not only that, but the volume from day one to day two was approximately the same. So you didn't see this increase in volume that Solana did. So they did much less in volume, and the volume kind of stayed the same or dipped slightly. So this is obviously a Solana specific phenomenon. As it
Okay, so
pertains,
the Solana
go ahead.
ETF doing very well, but the price of Solana not so well,
No.
down 16% on the week.
Yeah, you have to take this with a market wide look, though, Graham. I think the average for altcoins is double digits. It's like 12 to 15% on average for non-Bitcoin coins. So Solana is kind of in line with the entire crypto market in terms of going down. So just on this spot ETF, the Solana spot ETF, the most interesting thing about it from my perspective is the staking aspect, which I think is really cool. So 100% of the ETF's assets are staked, and all staking rewards are passed to investors, minus a little fee, of course. And I also like you can just tell that Bitwise really is crypto native. So the staking infrastructure for this ETF is provided by Helios. I don't know how to pronounce it. It's Mertz. It's Mertz company. The ex commentator slash Zcash cheerleader. Helios is a really awesome company. They are an infrastructure provider for Solana. And so by Bitwise choosing to stake all their soul with Helios, it really kind of contributes to Solana's overall stability and efficiency. And Helios does a really good job at like providing more performant API calls and access to block explorer data and things of that nature. So really smart kind of collaboration that is net positive for Solana. You see this kind of thing and you just think like, man, these guys are designing their product well. So you're not
Yeah.
just like supporting the price. You're also just really supporting the chain itself.
Yeah, and maybe one other thing to note here is that it is actually possible to stake 100% of the Solana ETF assets, and that is because of the way staking works in Solana. Whereas with Ethereum, it's not possible due to the long queue for unstaking. With staked Solana, you can unstake pretty much instantly, while with Ethereum, it, as we saw a few weeks ago or a month ago, can take as long as several weeks, which just that's not going to cut it when
45
you have,
days.
yeah, when you've, it's not going to cut it when you've got like liquidity requirements that are like in place in order to be able to actually run an ETF with regulatory compliance.
Yeah, definitely. A very, very important difference between Solana and Ethereum in this early stages. You could imagine that Ethereum ETFs, I guess it would have to require a rule change, but you could imagine them switching to LSTs, right? Liquidity staking tokens, so that they could offer up to 100% of the staking via LSTs of some
Yeah,
regard.
which are
But
liquid way to hold the staked version of the
yeah,
asset.
yeah. All right, so there was other pretty big story I think for Solana, and that was that Western Union is launching a stablecoin on Solana. Western Union had an announcement last week that basically said that they were kind of accelerating their transition to digital finance with these sweeping changes and integrations with blockchain. They're going after the payments thing, which is kind of the one of the biggest plays in crypto at the moment. And part of this sweeping, I guess, sweeping plan of theirs is to launch a stablecoin on Solana. Solana people loved this; they hailed it as a major coup, a win for them. Ethereum people grumbled and gnashed their teeth. Then it came out that Solana paid for this deal, and this sparked massive, heated debate across crypto Twitter about the kind of ethics of such deals and whether this is a good thing or a bad thing. Obviously, the sides were drawn depending on which ecosystem you supported, with Ethereum, Cardano, XRP people attacking Solana for being soulless business developers, BD people, and the Solana people attacking everybody, saying that they were coping, idealistic, empty chained losers. Quite entertaining. quite entertaining to see. For me, the overall takeaway is that this deal is normal. Everybody does it, and Ethereum and company were upset because they didn't get it, and the Solana people were upset for being called out for kind of having to do a deal to get the I guess stable coin flow.
Yeah. Just zooming out to the bigger picture here, David. Western Union, the company derided in the crypto space for a decade now for its exploitative remittance fees, now seemingly, what's the word? Capitulating and entering the crypto space itself.
Exactly. Also, funny thing is, like you said, absolutely derided, especially within crypto, right? However, the second that they kind of turn their face a little bit towards crypto, I guess all is forgiven, right? All is forgiven and like, yay, okay, this is awesome,
Yeah,
Western
well,
Union.
I don't think anyone was ever sort of blaming actually Western Union. That's just the way the market worked, and the lack of the tech that Western Union was forced to use just wasn't there. So now that it is, they can use this better tech, and they can presumably leverage it to stop charging as high as like 20% for remittances.
Yeah,
Let's
I
see
mean, I
what
don't
actually
know.
happens here.
I think they had a captive audience or captive customer base, and so they gouged. I think
Yeah, I mean
so.
they could have embraced crypto much sooner. So I guess that's a valid criticism. They like the writing was on the wall for a long time ago. That they from a long time ago they thought, well, whatever, we'll just let's milk. It seems like you could argue that they just said let's milk this for as long as we can, and now they can no longer. They're feeling the heat. Crypto is actually a competitor, meaningful competitor to them, so they must now adapt.
You know where they're feeling the heat from, though, is it's interesting, is from Tether, actually. So Western Union, their real strength is that last mile component, right? Because they have all the infrastructure built all over the world for people to actually go to and get remittances. And that
Yeah,
last mile problem,
get the cash in hand. Yeah.
yeah, and that last mile issue is really a kind of big problem because you can build out all these systems online very easily, but putting actual places and networks in physical space is quite difficult to do. They are getting some pretty good competition from Tether, right? In my interview with my good friend Paolo, he was talking about they've been buying up some kind of brick and mortar and other kind of Western Union like businesses all over Latin, Africa, Southeast Asia to help get their distribution up and running. And so I imagine Western Union is feeling the heat from that.
So Tether is putting in that last mile to basically convert between Tether and local currency. Is that the idea?
I don't. Yeah, I mean, I guess so. It's probably. I think my guess would be just to get people to move into Tether, right, and then you just stay there, right? Because once you get out of your local uh, crappy currency, there's no need to go back. You can just stay
Well,
in Tether.
except for that, if you want to actually buy something in the country, like bread or whatever, most countries don't allow cryptocurrency to be used to purchase items in their country. You can hold it as a like an investment or a hedge, but in fact, in most countries, you're not actually allowed to use cryptocurrency to buy things.
Yes, I mean I think that's the strict law, but apparently in some of these places where, let's say there's a lot of unrest or their local currency is so unreliable, people apparently do transact in Tether. I guess illegally or like in a gray market, what kind of way? So again,
Yeah.
interesting interesting use cases. But anyway, so Western Union is getting some competition there, and quite frankly, I hope that Tether makes a lot of inroads.
Okay, let's move on. So we've got some interesting stories here. Two big Bitcoin miners inked deals to diversify into AI. So first of all, we've got Iron Energy. They signed a deal with Microsoft, $9.7 billion deal, and Cipher Mining, another big mining company, signed a 15-year deal with Amazon. So basically, these deals are that like Iron and Cipher's data centers can be used by Microsoft and Amazon for AI purposes. So I just thought this is quite interesting because like we have seen a compressing of the profitability of Bitcoin mining over the last year. It's been all-time high after all-time high of hash rate, and the break-even rate. I think, David, you mentioned it's around 80K per coin perhaps right now,
Yeah.
and it's been compressing. These big miners, perhaps they're seeing the writing on the wall, and they are finding ways to diversify so that they can survive the next big downturn should there be one in Bitcoin. They won't be forced to go out of business. So you could argue that this is like bullish for Bitcoin. These companies where in the past they might have been forced sellers. Now with these kind of deals, when there is a downturn, they may not have to sell the Bitcoins on their balance sheet.
Yeah, absolutely. And I imagine I mean, this you've heard. I've been reading stories like this all year, and the people that I've talked to at conferences, especially like the Bitcoin conference at Vegas uh, during the summertime, um, they all spoke of this kind of diversification, and it's it's a very big benefit for them to be able to
Yeah.
cushion against
Yeah,
the kind of
David, exactly. And you and I both spoke, I think, with a gentleman from American Bitcoin, recently renamed Bitcoin mining firm, and he was saying they have never sold Bitcoin, and it's basically their intention is to never sell Bitcoin. They just want to keep accumulating it, and these types of deals enable that.
yeah, absolutely. All right, let's go to
All
a
right.
sad story. Very, very sad story. So over the weekend, Balancer, which is kind of an OG DeFi AMM DEX, they were exploited. Um, so the the hack, I think, is right now around 116 million dollars has been drained from Balancer across multiple chains. I think like 5 or 6 chains at the very least. And so this is their older smart contract, their V2. It's not even their latest one, the V3. Before the hack, Balancer was holding approximately 800 million in TVL. As you'd expect, this has dropped drastically just in a couple days to around 370 million, so kind of more than 50%. This is like your classic DeFi hack. It's a kind of smart contract vulnerability. The V2 smart contract's been around for I think 5 years. I read it's gone through many audits. It's been considered very reliable, and to that point, it's been forked and used on in many different areas throughout DeFi on many different chains. So the implications are kind of bigger than I would say than most of these hacks that you see, because it really just kind of makes market participants, it makes institutions and major holders feel that the space that DeFi is less trustworthy or less reliable. When you have something that's this old, considered this battle hardened and battle tested, fail, you really start to want to reduce risk and maybe get out of DeFi to a certain extent, right?
Yeah,
And
it's
maybe
definitely concerning. Like as someone who holds assets in DeFi protocols, you see something like this, and you're like, "Uh-oh!" Like, should I reconsider? And I thought it was also interesting. Addy, one of the guys behind Balancer, he said that, or he speculated that embedded console logs on chain or vibe coding or large language models might have been used to execute the exploit. Who knows what that means? But I've never heard vibe coding being used as
oh
as
no,
a
oh no,
so yeah, the somehow AI maybe is being leveraged to find cracks in these platforms, smart contract protocols.
yeah. So again,
Concerning.
very concerning, and again, kind of a bit of a blow to DeFi, to be honest, just because it's not a new product. This is not some new slapdash DeFi protocol being exploited, where you kind of go, no, that kind of makes sense. It's terrible, but it kind of makes sense. This is an old one, so not happy about this.
Yeah. Okay, let's quickly do one more story here before we wrap up. Just a mention of the emerging X402 narrative. So this is an X402. Okay, it's an open source payment protocol developed by Coinbase, and it revives the long unused HTTP 402 payment required code. So basically, what this can enable is for websites, APIs, and AI agents to send and receive instant micropayments directly through web requests. So
Just one little.
possibly, yeah, bypassing subscriptions and intermediaries like that. Go ahead, David.
I was just so if people aren't familiar with this like weird language, everybody knows 404, right? You go to a website and like the web page is gone or has never existed, you get a 404, which is like this page does not exist. So
Yeah.
this 402 is along this line, along these lines.
So when you ping the API, it comes back error 402, which meant payment needed,
Exactly.
payment
And so
required. Yeah.
and it was never used. It was abandoned, it was never used, and Coinbase has kind of repurposed this to for this micropayment. Sorry, that's all I was going to say just for people
That's it.
context.
And surprise, surprise, a bunch of scammy crypto tokens have popped up around this. And what we're seeing is that, yeah, the X402 sector has jumped from 178 million in market cap to over 800 billion in 3 days. So a lot of frothy
800 million.
speculation.
800 million.
800, sorry, 800 million, not 800 billion in 3 days. Frothy speculation over these tokens that have dubious use cases. Who knows what they are, but certainly
No
people are
use
speculating on
cases.
this.
Zero.
Reminds me very much of the AI agent token meta that we saw at the end of last year, and I got wrecked on. So, yeah, but this is an emerging, interesting space. So,
Yeah, I think
yeah, definitely something to keep an eye on.
the TLDR on this is just as you said, Graham. Um, the tech is good, and the tech will stay with us. It's going to have large implications in the not too distant future. However, these coins, pure vaporware, stay away. I think that's what I would say.
Yeah, probably ain't it. There may be, who knows though, there may be a diamond in the rough, but yeah, if
But
you're
I
not
mean,
like
like,
deep in
but
the
you don't
trenches.
need the token though, right? The technology is a
Yeah,
protocol, right?
well,
Like eight. Why do you need a
yes.
token attached to this? This is
Who
all.
knows? There may be some reason, but yeah, I wouldn't trust the white paper.
No, yeah, I think you'll see this be used a lot, but again, probably stay away from the this meta is my recommendation.
Yeah. All right, David, that wraps it up for today. Thank you so much for your insights as usual, and we'll see you on Friday for Token Narratives.
It's gonna be fun.
Have a great week.